We recently reviewed a financial plan that looked completely fine on the surface. Good income, retirement accounts, life insurance, investments, everything looked normal. But after reviewing the structure, we found inefficiencies that could potentially cost them thousands over time. And honestly, this happens more often than people think, because most financial issues are not obvious. Most people aren't walking around with completely broken strategies. Usually, they're just inefficient. And small inefficiencies, repeated over years, can become very expensive. This is why we always say the issue usually isn't what you have, it's how it's structured. Because two people can have very similar financial products and completely different outcomes. So, in this particular example, the client had retirement accounts, savings, life insurance, and investment accounts, which sounds responsible, right? And it was. But everything existed separately. No coordination, no tax strategy, no long-term income planning, no liquidity strategy. They had products, but not a true system. One of the first things we noticed was future tax exposure. A large percentage of their retirement assets were sitting in tax-deferred accounts, meaning they were postponing taxes, but potentially creating a larger tax issue later in retirement. And nobody had ever explained that to them clearly. The next issue was liquidity. Most of their money was technically locked away, meaning penalties, market exposure, limited flexibility, and very little accessible capital if life happened. Again, not necessarily wrong, just incomplete. We also reviewed their life insurance policies and realized the structure wasn't aligned with their current goals anymore. The policies themselves weren't necessarily bad, but they were built for an older version of their life. And this is why reviews matter so much. So instead of replacing everything, we focused on restructuring, meaning improving coordination, increasing efficiency, creating more balance, improving liquidity, and helping their strategy work together instead of separately. That's the difference. And honestly, the biggest transformation wasn't just financial, it was clarity. Because for the first time, they actually understood what they owned, why they owned it, and how it was supposed to work. And this is important because most people don't need an entirely new financial life. They usually just need education, structure, and intentional adjustments. And that's exactly what we help people do at Yellowbrick. We review what you already have, identify inefficiencies, and help you understand whether your current strategy is actually aligned with your goals. So if you've ever thought, I feel like I should probably have someone look at this, you can book a complimentary financial review below. Because good financial planning isn't just about owning products. It's about building a strategy with purpose.